one of the skill sets that you have, which is accounting for multi-entity businesses. So it's a business owner, he's got 4 or 5 different businesses. You've done cases where you've got a holding company and it's got 80 plus subsidiaries. And so how do you do the accounting for that? And the thing that I want to kind of ask you about, we see a lot of people make mistakes there. And so I wanted to just get your thoughts on like common mistakes that people make whenever they've hired somebody to do their accounting. They're thinking about bringing somebody in. Maybe it's a new hire, and common mistakes that people make whenever they're in that kind of multi-entity business situation, because it's a little bit different animal than what most people think.
Yeah, it's interesting when you have a bookkeeper or an accountant that's fully competent, very highly skilled. You think they're going to do a really good job. They have a beautiful background, but when you have multiple entities individually, they could be very easy. But reviewing all of them, let's say there's 5, that adds a little bit different level of difficulty, because not only do you have to do the financials for those 5 individually, you also have to reconcile any intercompany transactions that are occurring. You have to balance that on a regular basis to make sure nothing gets missed in income or expenses. You have to recognize equity and earnings. You have to be able to consolidate. That is where it passes a level that a lot of really good accountants and bookkeepers just don't know how to do it. And it becomes
Right.
overwhelming.
Yeah. And so you see like a business owner and he's got, in his wallet, he's got 4 different credit cards and he's swiping them, and it's not always using the right credit card. And so making sure that everything's tied to the right entity is a bigger chore than what most people appreciate.
Mm-hmm. And you have to make sure the expenses are in the correct company. Every company could be a different industry. It just depends. Another common mistake doesn't even fall on the business owner. It could be as simple as that accountant. Companies have vendor profiles. They put up accounts with vendors so they get terms. Well, if you set up a vendor at Home Depot, for example, and you have 2 companies, if they both use that same vendor, only one of those companies is going to receive that bill, and it's whoever you have the account with. At that point, you have to know these charges on this bill I received are actually for this other company. You have to run it through intercompany. You have to book it appropriately on that other company and balance everything out. And if you're not doing that, then your financials don't reconcile and they're worthless.
Right. So it's like this higher order thinking about just the business systems. It's instead of managing one credit card or managing cash flow for one entity, you've got multiple entities, and each time that you add another layer of complexity, it's like it grows exponentially. It doesn't grow just like linearly. And so you see a lot of people, from what I've seen, we've had a lot of clients come to us who their books have just been a mess, because it's like you may have a really competent person who's doing the bookkeeping, but it's just the work becomes so overwhelming because of the added level of complexity that maybe it was the business owner's choice, maybe it was a really smart attorney's choice to layer on that complexity, but there's unintended consequences to that. So what are some other things that you've kind of seen, or some stories that maybe illustrate kind of what you're talking about?
I think a common one is if you have multiple entities as a whole, as a business owner or just a leader in that business, you'll know if you're profitable or not. You might know it intuitively, or just globally looking at that bank account. But what a lot of business owners don't know is this one line of business that I've separated into a different entity for specific reasons, that what's the profitability on that one line of business? It's indefinable purely because the data isn't separated.
Mm-hmm.
If the books are not managed individually and consolidated, what happens is everything gets mushed into one and everybody's touching everybody else on those financials. You really have no idea if this leg of your stool is performing and if you need to push it to grow more profits or cut it off because it's just eating your cash. You don't know.
Right. Yeah, and this is something that I see pretty often with business owners is they don't quite understand. Like they set an expectation with the whoever was doing their bookkeeping, and maybe that bookkeeper didn't realize what they were getting themselves into, so they set them those expectations too. But you've kind of found yourself in a situation where the level of work that's required to produce all the reporting that everybody wants is just is impossible
Mhm.
without a little bit more help. And so I think it's pretty common for me to see a business owner get frustrated with who's doing their bookkeeping whenever they have those multiple entities, because they want that detailed reporting. They want to be able to drill down on this one little division. Maybe it's it accounts for an eighth of the revenue of their business, but they want to see it because they want to know, should I keep doing that? But expecting the bookkeeper to be able to code all that stuff correctly whenever they're managing all this other chaos and it's a large growing organization becomes just uh, a exercise in futility. So
Mhm. It
you've
all
seen a
comes
lot of
down
that.
to, yeah, it comes down to the skill set of that bookkeeper too. I mean, you're likely going to run into two scenarios. One, where the multiple entities are in the same industry. They're just functioning differently, so they're set up separately for whatever reason. Or the multiple entities are a wide range of industries. So in scenario one, where we have 4 or 5 entities, but they're all the same industry, you can hire a bookkeeper and accountant that's very familiar with that industry. They're going to struggle to identify which expenses are in which company because it's all the same industry. There's nothing
Mhm.
definably different. Or you're going to have 15 different bank accounts, 15 different credit cards, and that just muddies the water even more. In scenario two, where you have 4 or 5 different industries, that's a whole nother beast. That bookkeeper has to be well versed and experienced in every single industry so they understand, does this entity need job costing? Does this entity need to accrue revenue? Does this entity hold inventory? How does that impact the intercompany? How does that impact the holding company?
Mhm.
It's difficult to find someone that has that skill set and it's just one person.
Right, right. So talk a little bit about, because this is something that you've had some experience in, and you can maybe talk a little bit about this without naming names or anything like that, but talk about, you had a client that had, I think, 87 different subsidiaries and was in this situation. And it was, a huge amount of effort in the beginning to do the bookkeeping for that because the systems weren't set up. But through a lot of training, some automation, just creating systems and processes, procedures, you got that really standardized to where that business was able to reduce the amount of work required to do the bookkeeping, but also gave them the reporting to open up a few new lines of business that ended up being pretty significant.
Yeah. For that one, it was fun. But imagine as a business owner having 80 plus businesses and on a monthly or quarterly basis, even you want to know what's going on, where you need to focus your efforts, and you're looking at 80 sets of financial statements. That's going to be overwhelming for anybody. You really need that global picture. But when you look at the holding company that's supposed to be your global picture, you don't see the profit of the other 80 plus subsidiaries that you have. It's not there because the earnings that are passing through financial review owning those subsidiaries just aren't there because your accountant doesn't know how to book them. That problem number one. And actually, one of the most common things that I see, that holding company never records the investment revenue. It never records the assets of owning that investment. And that should increase or decrease with your net earnings every month or however often you're doing financial statements. Once we implemented that and then reconciled all of the intercompany balances, we were spending so many hours, hundreds of hours on those things, just cleaning it up and training and setting up processes. But that piece alone allowed us to do an accurate consolidation of the financials. And that consolidation is just mushing 80 financials into one, and provides the visibility that you would see, and just as though it was one company. That showed them that they actually were profitable when they thought they weren't profitable. And they were able to use that to make a decision on opening some more subsidiaries that produce millions and millions of net profit for them.
Yeah, and you took that from, and I just wanted to bring this out so that people could hear it, because it does illustrate that there is a process that you go through to make this easier on yourself. Just that unless you've gone through it before, it's not glaringly obvious. And so it's a real skill set. And so you spent how many hours, per month just completing financials whenever you started with that customer? And then talk about where it ended up.
Just financials and getting every entity had individual, and then doing the consolidation, me working with the controller that they had and their bookkeepers on staff. It was about 180, 190 hours, just financials, no training time. And by the time it took 4 or 5 months to get everything set up, by the time that we were done, we were able to do all 80 plus financials and the consolidation on a monthly basis in under 50 hours.
So you cut that time down to a third of what it originally took to do the work, and through automation and through training and through process procedure. And talk a little bit about too, because the result of that was really important. This business that you worked with had thought that they were losing money. They were at a standstill with the business. They actually thought that they were going to have to retract and sell off a piece of their company possibly. But it ended up that once they got the reporting, because of the work that you did to clean all that up, they realized that they had enough capital coming in to redeploy into other businesses. They had, they had a visibility of, are these activities profitable or not? And so it ended up having a pretty big impact. Just if you can talk about that.
Yeah, they were able to open several more subsidiaries that created hundreds of jobs just in Arkansas, hundreds more globally. It was absolutely amazing. But the net that it brought in was millions of dollars for them, for their bottom lines.
Right.
And it steamrolled into a project that is even expanding to this day. Their holding company was able to expand as well, and that boosts the economy just by nature of what they do. It was fascinating to watch just what a neat little consolidation report was able to provide. They were in a position before I stepped in where they knew they had accurate financials on an annual basis because of the reviews that were being done. But we were able to take that and make it so they had accurate financials on a monthly basis. And they were able to make decisions much more quickly and pivot when something wasn't working. And it has drastically changed how they do things.
Yeah, so it's a little hinge that swings a big door in a way. Is I see business owners, whenever they have operated in a world where they've never had really great financial reporting, and they've not just been able to have the map that tells them exactly where they need to go to get to the destination, achieve their goal. so to speak, they don't realize what they're missing. They don't realize all the decisions that they didn't make because they didn't have clarity. And so it's like uh, one of those rites of passage, I think, for an entrepreneur is when realize just how powerful the data can be, especially whenever you got multiple entities, because there's always one that's uh that's doing really well, and there's always one that's a dunce. you know
Mhm.
there's one, they're not all performing the same, and so doing more of one that's working, doing less of the stuff that's not working is one of the ways where we've seen people kind of transform their financials. So um, that makes perfect sense. So what else, anything else that you've learned in doing this consolidation and multi-entity reporting that it would help people to just know or to be thinking about or to consider?
Yeah, I think from what I've seen of consolidations, most of the time they're wrong, unless you're getting, your CPA to make them for you in an audit and such. But having an internal accountant do that consolidation, it's 9 times out of 10, it's not right. And I have heard so many frustrations from business owners where they look at the reporting and they know it's not right, but they don't know why it's not right because they're not accountants. That's not their passion. But the accountant isn't really able to tell them why it's not right either.
Hmm.
So what will happen commonly is if you're reviewing financials monthly or quarterly with your accountant and you look at something and you're like, oh, what's this? I don't know what this thing is. If it takes them 2 or 3 weeks to find the answer, it's because they didn't really know either. And they probably had to create a report and dig into stuff when in reality, if a consolidation is done correctly, you should be able to source that answer within an hour or two
Right.
because the data is traceable, it flows, you know which entity it came from. You can see it all very transparently.
So maybe you think about those as a couple of tests for if somebody's in the situation where they've got multiple subsidiaries or they got multiple companies, they're looking at financials, they know they got a gut feeling that this is not right. Listening to that is a sign that maybe you need to do something, because it's a sign that you don't have the visibility that you could have, and then you don't know what decisions that you're not making today because of that lack of visibility. And then if things are taking a long time to get answers on, then that's maybe another sign that where it's time to kind of dig in and understand if maybe somebody's needs a little bit of help to wrangle the the whole accounting system and get the consolidations that you need. Yeah.
Yeah. And the relationship between a business owner and their accountant is super important. Because in my experience working with accountants, we have a tendency to think we could conquer the world, and we don't need help with anything. But if a business owner is trying to source the information and they're running into a hill where it takes them weeks to get answers, and then maybe those answers don't make sense, and the accountant isn't comfortable telling them, hey, like, I'm overwhelmed and this is a little too much. Maybe they're afraid of losing their job. Um, that starts a much bigger problem
Hmm.
because then communication of as simple as separating entities and understanding what buckets everything needs to go in, it just starts spiraling downhill. And I have
Hmm.
seen books that look pretty good and the accountant's doing pretty good, and then that relationship falls off a cliff for some reason and the books just go downhill. So that would be my last tidbit to throw.
That's interesting. Is I think most of the entrepreneurs that we work with are they're driver pusher personalities, and they kind of want what they want, and they want it right now. And that's good. The business needs that. And they bring in a person who they believe is an expert in getting them financial reporting and explaining the numbers. But for whatever reason, that entrepreneur's not getting them. And what
Mm,
ends up happening, I think, is what you're saying is there's a frustration that gets created there that an accountant who is afraid of the boss finding out that maybe they don't know, they don't have all the tools in the toolbox to be able to accomplish something, or maybe it's just the amount of work is overwhelming and they're too scared maybe to say, hey, like I need a, give me a little breathing room here or give me some help. It creates this spiral where then you got the owner of the business that's getting mad and is driving a wedge between the accountant who they're getting mad, they're feeling bad about themselves too. And so they start getting pulled apart. And all of a sudden you see business owners, we've seen this quite a bit, I think, is they get so fed up that they start thinking about replacing that person. And that doesn't actually solve the root cause of the problem, which is there's a certain skill set that's required to do those big consolidations, multi-entity accounting. And maybe that's just maybe the person isn't right, but maybe also some grace to help that person just see that maybe we need some help and we want people to succeed is all that's needed to kind of make the situation way better and for everybody to be happy. So
Yeah. And
well,
that that's like my favorite part, because when we go in and we're able to reset the foundation, as I like to say, and set up procedures so they can be followed and it's actually a doable job, it's twofold, because whatever accountant is on staff absolutely loves having those procedures. It gives them something to fall back on when they run out of time.
right,
But it also identifies for the accountant and the business owner, do they have too much on their plate? Do we need to hire somebody else or bring
right,
somebody else in to help out? So, yeah.
absolutely, yeah. Oftentimes it's the business owner is trying to avoid spending more money, but
Hmm.
they've found themselves in a situation where there's the only two reasonable options are to shrink the business or to spend more to get the visibility that you need, at least in the short term. So,
Yes.
yeah, I think this is good. I think that this kind of gives people an overview of some of the challenges that you're going to face with multi-entity accounting, some of the things to look out for in terms of the relationship with your accountant, some tests that they can kind of use to see if they need some help or not, and an idea of just how this is such a different, uh, it's a little bit different animal, is much more complex type of accounting that gets people in trouble because they don't have the training or the appreciation of that. So this is really good, Natasha, and
Yeah.
I appreciate you weighing in on the topic.
Yeah. Thanks, man.